In this video, I'm going to be talking about two basic principles to stock investing so we can get an idea of what is the stock market and what does it mean to be invested in it. To set the scene, I want you to imagine in your mind a market. It can be a supermarket, farmer's market, flea market, night market, any kind of place whereby people come together to buy and sell things. Food, clothing, bags, accessories, random assortment of things. So now you have a picture of the market in your mind. The stock market is a market just like this. Except what is being bought and sold are businesses. There are like thousands of different companies and stocks that you can buy in the stock market, and each one of them represents a business. For example, we think of companies like Samsung, and they are in the business of making consumer electronic products. Or we can think of a company like Adobe, and they are in the business of developing and selling productivity and creative design software. So when I go to the market to buy shares or stocks of a company, what I'm buying is actually a business. So for example, if I were to buy shares in Volkswagen, that would basically make me an owner of a business in the automobile industry. Alright, so we get this picture of the stock market. It's a market whereby businesses are bought and sold. That brings us to the first principle of stock investing, and that is when we invest in the stock market, we are basically buying businesses. And therefore, we have to approach this process with a business mindset. We have to think like a business owner. What does this mean? Well, if I own a car business, then naturally I'm going to benefit if my car business does well. Now, if I'm going to start and run a car business, what do I need to do? What do I need to know to ensure that my car business is going to do well? Now, at the bare minimum, I should know the market really well. Is there a demand for cars? Is there a demand for my cars? How am I providing value to my customers? How am I differentiating my products and services from my competitors? Also, it is important that my business is managed well. So things like my finances, my costs, the people that I hire to work in my business. And obviously when I set up a business, it's for the long term. So I have to think about what are the opportunities for growth and sustainability in the years and decades to come. And I also have to think about what are the possible threats and challenges that my business is going to face along the way. As a business owner, this is just some of the many things that I have to consider. And why? Because everyone knows business is risky and most businesses fail. Logically, if I'm going to set up a business, like the car business that we talked about earlier, I need to be pretty convinced that there's a good chance that the business is going to work out, that my efforts are going to be paid off. When we buy shares, when we buy stocks, we are buying businesses. That effectively makes us business owners. Therefore, as a business owner, we want to ensure that we buy businesses, that we have businesses that have a good chance of giving us a sustainable return for the long term. So before we go into the stock market to buy the shares of any business, we should be asking the same kind of questions as though we were setting it up ourselves. What is this business? Is there a market for its goods and services? How is it creating value for its customers? How does it differentiate itself from its competitors? Are the finances of this business well managed? Does it have the potential, the opportunities for long-term growth? What are some of the challenges that it's going to have to face along the way? When you buy shares, when you invest in the stock market, you become a business owner. So start to think like one. Alright, now let's go back to our market example. When we have a buyer and a seller, they come together and try to make a deal, what normally happens? This is where we will start bargaining, right? We will start negotiating for a price. As a buyer, we always tend to want to buy at the lowest price. But as a seller, we tend to want to get the highest price when we are selling stuff. If this is something that we do normally in any other market situation, this is something we should also be doing in a stock market where we are buying and selling businesses. The second principle to stock investing is to always be looking for a deal. Now, after we have identified a good business that we want to buy, a business that will give us long-term returns in the future, we want to be buying this at a discount. We want to be looking for a business that we can buy at fair value or even better than fair value. But the question becomes, how do we know what is fair? Now, this is where we need to learn how to value a business. Valuation gives us an estimate of how much a company, a business is worth, so we can make a decision about whether we want to buy it now or whether we want to wait until we can get a better price. Now, there's several methods of doing valuation. We're going to cover them in this channel as we go along, so make sure you're subscribed if you want to learn how to determine the value of a business. So there we have it. We're buying shares, we're investing in stocks. It effectively turns us into business owners. So think like a business owner. When investing, make sure you're only buying businesses that are well managed and have opportunities for long-term success. This gives you the best chance of making a long-term sustainable return on your investment. And of course, make sure you're getting these businesses at a good price, at a bargain, at a fair price. Alright, that's it for today's video. I hope that it gives you a good overview, a good introduction of the mindset we should adopt when we are looking to buy shares, when we're looking to invest in the stock market. So like, comment, subscribe if you found it to be helpful, and I will see you in the next video.